I did my first FTMO challenge in 2019. I completed the challenge, got the funded account, got my first payout from FTMO, and then after that I blew that funded account that I got with FTMO. After that, I was able to get a funded account from Funding Talent. I was able to get a funded account from my Forex fund, then the Funded Trader program, and right now I am currently funded with the Funded Trader program and I'm trading their $500,000 funded account. And I am also about to complete bespoke funding challenge, which I will be sharing a proper video in few days. But what is my trading strategy that I use to trade the challenges? What is my trading strategy that I use to trade the funded account, my risk management? Everything will be covered in this video. So make sure that you watch this video until the end so you do not miss any important information that I will be sharing. And guys, if you are new to the channel, consider hitting the subscribe button and turn on the notification bell. And if you will find this video valuable, consider leaving a like as well. Now let's deep dive into today's video and see what is my FTMO trading strategy, my funded account trading strategy, and how you can replicate that trading strategy on your own account to pass the challenges and to get a funded account. Alright, so right now I am in this trade as well for the gold buy. I took this trade last day and it's been going very well so far. My target is this highest on the 4-hour time frame from where we started to make a pullback. But I want to show you one of the trades that I did last night before I went to sleep. And I want to deep dive into what made me take the sell position on New Zealand Japanese yen, how much money I risked, how much money I made from that trade on my funded account, how much money I made from that trade on my challenges that I'm doing with bespoke funding program. And I'm gonna make it very easy for you to understand, so that way you can have an idea that how I am trading on my funded account. Now that was the trade that I did. Right at this area when market was here, I took the sell position. I put my stop loss just higher than the recent rejections area, and my target was at this area from where I was expecting a rejection. When I was sleeping, it hit my take profit, and when I woke up, market was somewhere here right at this candle, and I saw that yes, it had reached my take profit even though it went to the upside after that. But overall we are going to the down towards the low of the higher time frames. Now what made me think that New Zealand Japanese yen pair will drop from this area? Let's find out. So right now I have 3 time frames opened up. This one is 4-hour chart on New Zealand Japanese yen pair. This one is the 1-hour chart, and the one that you see on the left is the 15-minute chart. Usually I take my position from 15-minute, I put my stop loss, I put my target on 15-minute time frame. But I always look at what 1-hour and what 4-hour are doing to have an idea that what is the chance of my trade going into the profit based on the higher time frame analysis. Now this type of analysis is called top-down analysis, and I'm going to start with the 4-hour time frame. Now on 4-hour time frame, what you see, overall market is going for the down from this level to this level. The point is, when you're trading on the 15-minute time frame, you do not need to look at all the data on the 4-hour time frame. You just need where the recent market structure is. Now overall the recent market structure is for the downside, but the very recent market structure on 4-hour, that's something that I am mostly interested in. That is also for the sell side, which we can see from here. Sellers did make a strong movement to the down and created a very nice bearish market structure. Now this 4-hour movement, it's going to be a lot of data on the 15-minute time frame. That's the reason I'm saying that what happened weeks ago on 4-hour chart does not really matter, because we are only looking to trade today and we're looking to trade on the 15-minute time frame. So after this big bearish momentum happened on New Zealand Japanese yen pair on 4-hour time frame, market started to make a pullback. Now when market was making a pullback, that's when I like to go down to 1-hour time frame, because I prefer to see how the pullback is coming in on the 1-hour time frame. Now on the 1-hour time frame, this was the bearish market structure from here to here. Now when market made a bearish market structure, the point that you need to notice is that market never just goes down and goes up. It always comes down, creates a lower low, goes up, creates a lower high, makes another lower low again. That's how market moves in a proper market structure for the downside, and it's the same case when market is going up, it's creating high high and high low sequence. Now when market was moving down from this price level, it made this support, also acted as a lower low, and then it bounced back. When it bounced back, we created a resistance which is now also going to be acting as a lower low right after market resumed its trend to the down. So overall, we know that we are creating a bearish market structure. We have proper support and resistance or supply and demand area as well. Now, if you just compare this movement from the sellers to the movement from the buyers, what would you say? Won't you say that overall the strength inside the sellers movement was quite strong as compared to the strength in the buyers movement? Market made a movement down, but at the same time when buyers are coming up, they are coming up with a lot of struggling movement. Like there were a lot of struggle from the buyers to come to the same area, to come to the same level from where the market dropped recently. Now when market was making a movement towards the same price level from where it dropped, which is this resistance area, or also known as lower high, as we are making a lower low lower high sequence, right at the time when we reached at this area, look what we are doing. We first made a rejection here, we made another rejection here, right after that we are making a third rejection. So usually I need 3 rejections at the resistance at the lower high area in case of the sellers example, and the 3 rejections in case of buyers at the support or high low area. Now the first time when market reached at this area, it rejected and it went down. The second time when it reached at this area, it tried to go higher than the previous rejection, but it failed again and it went down. Now this time when buyers are coming, they are coming in proper higher high and high low sequence. They are making highs, high lows, highs, high lows, highs, high lows, highs, high lows, and at the same time they're at this area from where we have previously seen 2 rejections. So as we need 3 rejections, and at the same time we need this type of market structure when market is making highs and lows just to try to go higher than the lower high, but it got failed. The second it got failed, I knew that market is gonna make a movement to the downside. So I went down to 15-minute time frame. Now this is my 15-minute time frame, and that was the first rejection, this is the second rejection, and this is now the third rejection. Now right after the third rejection, market retested this rejected area and it started to create its movement to the down. When it started to create a movement to the down, what do we say when we need a sell trade? How do we know that the sell trend is continuing? Because market is gonna make a lower low and lower high sequence. So now you can see this low that market created, it was lower than the previous low. So that is how I knew that we just need a slight movement to the upside, which is going to be acting as a lower high, and I'm gonna be interested in taking the sell. And the second after I saw these 2 candles that were formed at the rejection area, I ended up taking the sell, put my stop loss just above the recent rejection area, and my target at the price from where I was expecting a reaction. Now why did I put my target right at here? Let me show you the reason. On 4-hour time frame, if you will look closely, you will see that this market structure right here was never tested before. Sellers did try to come to this reversal, but they did not really come, and buyers went up for the third rejection. Now when I took the sell, I knew that there is a high probability that whenever we will come to this level of reversal, these 2 candles, we are going to expect a reaction, and that's what happened. On 15-minute time frame, you can see that how strongly we got rejected at this reversal area and buyers went up. That is the reason why my target was only at the reversal area, because I was already expecting a rejection. Now what most traders do, they try to overcomplicate their trading strategy. They end up adding multiple trading indicators, and they think trading indicators are going to be helping them in finding the right trade opportunities. But I always recommend that just backtest the trading strategy, find out your exits, find out how you need to enter, from where you need to enter, from where you need to exit, when to trade, when not to trade, and then make a trading plan that should cover everything that I just said. And your only job is that you have to follow this trading plan over and over again, and you have to keep everything simple. My trading strategy is also simple. I start with a 4-hour time frame. On the 4-hour time frame, I look at the recent market structure. If the market structure is going for the downside, it means it is creating lower low and lower high sequence. On the 1-hour time frame, then I wait for the pullback, and I wait until the pullback comes towards that lower high area, which is also like a resistance, and then I wait for 3 rejections. The second we start to have this third rejection, that is when I move down to 15-minute time frame, from where I usually take the trade. After the third rejection, I see if market has started to continue its movement to the down by creating a small lower low and lower high type of sequence, then and only then I take the trade, I execute my trade, I put the stop loss above the third rejection, I put my target at the support areas from where we can possibly have a reversal. And that's the whole thing that I do. You have to keep your trading strategy very simple if you are looking to make a lot of profits. This is the strategy that I have been using since 2017 when I first learned it. It took me some time to understand that I just need to keep everything simple, and then and only then I can make a lot of profits. Now coming to my risk management. When I'm trading on the challenges, I used to trade in a way like I was trading with 1% risk on my first trade. If I was making 2.5 rewards from that trade, meaning 2.5% profit, then I was using that 2.5% profit on my second trade, and I was targeting at least 2.5 rewards again from the second trade. So if I was profitable for 2 trades consecutively, that means I have completed the phase 1 of the evaluation. So the great thing is, now all the firms have removed time limit restriction. There is no time limit on phase 1 and phase 2 of the evaluation. So my approach now is that I am not gonna be risking more than 1% on every single trade when I'm taking on the challenges. But when I'm trading on the funded account, my maximum risk is 0.5%. But that is my maximum that I usually take. On this trade on New Zealand Japanese yen, I only took a risk of $1,100. And I made around $3,300. Now $1,100 on a $500,000 account is not even 0.3%. It is just higher than 0.2%. That's my usual risk on the funded account, because I have to keep these funded accounts for as long as possible. And I'm not looking to blow them just to make some profits very quickly. So I hope that you guys got some value out of this video. If you did, let me know in the comment section, and follow me on my Instagram if you are still not following me. I will see you guys in the next video. Thank you for watching.